What's going on, YouTube? Welcome back to another video. In this video, we're going to be breaking down this trade here, which, as you can see, I was able to short at the exact highs, scale into my position, and take my profits right here at this rejection block, shorting from the exact highs and buying back at the exact lows. And in this video, I'm not only going to give you guys a trade breakdown, but also the exact framework that I use when it comes to mastering turtle soups. If you guys want to join the free Discord community, that will be the first link in the description. We do have a free 2-hour course by me and my brother Spec Trades, additional ebooks, journals, as well as PDFs, as well as if you do want live trade with me and my brother every single morning, access to 100+ hours worth of additional lessons, education, and courses, plus weekly webinars with me and my brother Spec Trades. You guys can click the first link in the description and join the Spark Trading community for completely free. Now, let's get into the video. So essentially, a turtle soup is when prices reaching higher and higher prices and you sell as the market is going higher, or when the market is going lower and lower and you buy as the marketplace is going lower, essentially catching the high or catching the low of the range. But before you sell as the marketplace is going higher or buy as the marketplace is going lower, you have to pay attention to these three key frameworks. First, we have to pay attention to what is the overall context. Next, we have to pay attention to the overall narrative. After finding out the context and narrative, then we can go down to lower time frames to frame our execution. First, when it comes to context, we have to pay attention to our higher time frame points of interest in any potential liquidity pools. We can see that price obviously gave this massive push to the upside. This was during CPI. As we can see, price then comes higher to take out this original high, as well as we are reaching back up into this bearish fair value gap level. As we can see, price created this original high, then we create this failure swing here, creating multiple inefficiencies inside the marketplace as it was driving lower. As price has found support down here, starting to push back higher prices, we can anticipate price to come back into these levels of inefficiencies before continuing back lower or potentially seeing a reversal back higher. So essentially, coming into the marketplace here, seeing how we had this original drive higher during the CPI, I was anticipating once we tapped into this level of inefficiency, price could find some type of resistance at these levels and we can see a lower time frame break reaching back below lower prices, back into any potential inefficiencies left within this range. We can see we had this expansion to the downside. Now we're anticipating this correction reaching back below lower prices. And right here, we can see we had this expansion to the upside. And now I'm anticipating that turtle soup to form here to give me that correction move. So you can either take the trade based upon the expansion higher, or you can take the short off of the correction lower. When it comes to framing overall context, we want to pay attention to the higher time frame points of interest, like the 4-hour, 1-hour, and even daily, fair value gaps, order blocks, and rejection blocks. In this case, this was a bearish fair value gap on the 4-hour time frames. I'm anticipating price to come into this level, find a level of rejection to reach back below lower prices. Now I'm going to go down to a 15-minute time frame to gain additional context. Actually, now that we're on the 15 minutes time frame, this is where we can then frame our narrative, and narrative is simply our draw on liquidity. After price has created our overall context, where do we anticipate price to go next? So once price reaches back up into this bearish fair value gap level, I'm anticipating price to find some type of rejection. We have already seen the marketplace drive up higher for over 100 points now, right? There's no way price is going to come into this fair value gap and then continue going higher for another 100 points, right? There has to be a position inside the marketplace where it has to correct itself to gain additional liquidity before it can then continue higher. And that's what we want to classify as our turtle soup. That position to where we establish that this is the highest it could go, and we have to create a correction coming back down into any inefficiencies before price continues going back higher or potentially reverses back lower. So obviously we can identify this original low here as the CPI low, and then we can identify this original high as the CPI high. We obviously see this massive spike to the upside during that CPI range, creating this thing range from high to low. We can see that price has already came higher, taking out this prior CPI high. So this would be a level of liquidity right here that we've just taken out. So essentially now when it comes to establishing a narrative and where I anticipated price to come to next, I utilize this rejection block. So as we can see, we have a long wick inside the marketplace here, and this is referred to as our rejection block. And when we have long wicks, I like to split them up into quadrants. So we have the low to the high of this long wick level. We have the 25, 50, and 75% of this wick level. So if we could see price come back higher into this bearish value gap, see a level of resistance, I want to see us come back lower into either this long wick level or potentially taking out this original low. Just keeping things very, very simple. We've already had this expansion to the upside. So essentially we're reaching up into a higher time frame point of interest. Once we tap into that higher time frame point of interest and we find a level of resistance, I'm anticipating price to reach back lower. I'm anticipating price to reach back lower, targeting opposing levels of inefficiencies and liquidity. This rejection block is an inefficiency. So I'm anticipating price to come back into this inefficient level. So my overall context is obviously I'm anticipating right now higher prices to tap into this point of interest. But once price tapped into this point of interest, I'm anticipating that correction, reaching back into inefficiencies and liquidity. Just keeping things very, very simple. Now, the last thing that I want to utilize is our higher time frame execution, which is also in alignment with time. It's very important that when you're trading turtle soups, you have to align them with the current kill zone that you're in. We're currently in the stock market New York open kill zone between 9:30 to 12 p.m. EST for the S&P 500. So essentially, it's very important that whenever you're anticipating a high or low to form, it has to be during your current kill zone that you're trading, whether it be the London session or the New York session or even the London close. So as we can see, the 9:30 just opened up. We had this initial rally higher, creating that rejection block here. So essentially, I'm anticipating that once price comes into this level, find that resistance to reach back lower prices. Now I'm going to go down to 5 minutes time frame, and I'm going to look for that lower time frame execution like we mentioned during our New York session kill zone. And now we're on the 5 minutes time frame. I'm going to let this play out as price taps into this higher time frame point of interest, and we can look for that lower time frame execution. Right here is when I took my exact entry. Once price tapped into this fair value gap level and then gave this CISD. So essentially a CISD is when we have a last up close candle that then gets broken within a higher time frame point of interest. After price had tapped into this 4-hour bearish fair value gap, we can see we have this body close below the opening price of this last up close candle. When we tap into a higher time frame point of interest and then we close back below that opening price, this then creates that change in state of delivery. It was once I realized we had this change in state of delivery after tapping into that 4-hour bearish value gap, I would then take my trade entry and I put my stop loss back at this original high, reaching back down into the 25% of this long wick level for over a 3-to-1 R. So essentially, if you guys remember, this is that rejection block here on the 15 minutes time frame. I was anticipating price to come back into that rejection block here because obviously this is a level of inefficiency inside the markets. So I'm anticipating price had found this expansion higher, reaching back up into that 4-hour bearish value gap. Price could not continue higher. It cannot continue higher. So obviously the next move here is it has to give a correction, reaching back into levels of inefficiency. And obviously we do have multiple points of inefficiency here. We do have this original fair value gap here. We do have this order block here, but also we do all the way down here, we do have this rejection block. It's very important that you pay attention to these long wicks inside the marketplace as price tends to come back down into them. First, we framed our overall context. We were anticipating higher prices for that expansionary move into that 4-hour bearish value gap. Then we had framed that overall narrative. I'm anticipating once price tapped into this level of resistance, we can see lower prices reaching back down into this rejection block. And then we framed our lower time frame execution. Once we got this body close below the last up close candle, this then created that CISD. I was able to frame my short, stop loss back above the CISD high, reaching back into that rejection block level for over a 3-to-1 R. Let's see how this plays out. So as you can see, price comes out into at 25% of this rejection block level perfectly. It does end up coming down to 50%, but I wasn't targeting the 50% just because I do know price tends to hit the 25% more than often and not really the 50% as much. So I just made sure to get out where I got out. But as you can see, the 50% did end up being the exact low of the day. And then we did see this overall reversal going into the PM session. So we're able to short at the exact high and catch the exact low of the markets utilizing this 3-step framework that I just taught you. So essentially that's going to be it for the video. I hope you guys got a lot of value from this video, and if you want to catch trades just like this every single day with me and my brother Spec Trades, you guys can just click the first link in the description and join the Spark Train community. Me and my brother are live trading every single morning. We have hundreds of hours worth of additional courses, lessons, SMC, psychology, risk management, everything that you need to go from a beginner to a complete expert when it comes to mastering smart money concepts and everything that we teach you. But before you leave, make sure you guys leave a like, subscribe if you haven't already, and comment what you guys want to see next. I'm your new mentor, Arkhamtrades. Thank you for watching. Be safe.